Hello, everyone, and welcome back to YouTube. Today, we continue the interview with David Warner, and we discuss number one, why people are running out of money in retirement, and two, why investing in a 401k or an IRA, simply contributing money to it, is actually not enough. It's actually a risky move to be doing it today in 2020. And lastly, number three, the truth about financial planners and how they aren't actually fiduciaries. That term is actually kind of a myth. They don't really have your best interest at heart. They really only care about one thing. So make sure you stay to the end of the video to find out what that is and how you can protect yourself from any further stock market crashes. So David, I don't know if you know this about me, but I'm Korean.
Couldn't tell.
My family, my parents and grandparents, they came here in the late 70s. My immigrant story is very different than most people's immigrant story, where they're escaping their home country and coming to America to escape some form of hardship. My family actually came here with millions of dollars like in their pocket. They were incredibly wealthy. Yet in 2019, when they're retired, they got nothing.
Yeah,
it's a super common story. I researched it, and it's not just my parents. It's not just immigrants. It's very, very common that we hear about that. So what's going on there?
it's very common. I unfortunately meet people like that on a pretty regular basis, and the problem I think is that people don't look far enough ahead. We just get so comfortable with what we're doing with our everyday lives, and we just we kick the can down the road. Right. I'll get to kind of planning for retirement and saving and kind of looking at my future. I'll get to that. You know, humans by nature for the most part are procrastinators. They always put everything off, especially if something is uncomfortable. Or something that's unknown. But I think what more people need to do and just understand that, listen, life is short. And there's going to be a period of time. There's going to be a time that comes into your life when you cannot work. Either you're just too old to do it, or someone tells you you're too old to do it. So you have to plan for that. The goal I feel in life, if people ask me, that would be to do whatever you want, whenever you want to do it. And in order to achieve that, that's going to require some time, energy, and not a ton of effort, but some effort into kind of sitting down. What am I going to do about my retirement, my future? You asked me earlier about 401ks.
Yes.
401ks, IRAs. If you're in a company that's offering you a 401k and you're not taking advantage of that, I think that is, that would be a really, really big mistake. You want to have some type of vehicle that is kind of where you are kind of thinking about your future. And if you aren't with a company that offers a 401k, I think one of the smartest things people can do for themselves is go and open up an IRA account. I told you I have an 18-year-old daughter. She's in her first year of college. My graduation gift to her was an IRA account, because I just started to want to work on, her future and make, her retirement and her life as comfortable, as I can possibly make it. But if you're contributing to a 401k, you need to start learning how to protect yourself at the same time. The thing about 401ks and IRAs, they're just passive. They just kind of work in the background. Money comes out of people's paychecks, and the money that's coming out of people's paychecks and is going into their 401k right now, it's buying things at the highest price anybody's ever paid in the history of time. And no one goes to a store, buys something, and then brags to somebody that they paid the highest price that anybody's ever paid in the history of time. If you kind of look at where we're at today, markets are hitting all-time highs almost on a daily basis. And this is the second longest that the stock market has gone up since World War II. We're in year number 11 of a 7-year typical market cycle.
Right.
And you look at the relationships we have with our trading partners, trade wars with China, trade wars with Europe now. We have a Brexit that's kind of working its way through a system. We have an election year coming up. And so for people that are just kind of passively, 401k, money's going into it, IRA, they want to have some protections in place, because it's not a matter of, if, we have another market crash or correction. It's just simply a matter of, when.
For most people, the experience of a 401k is they just take some percentage out of my paycheck and plug it into this this magical 401k account that's going to grow and supposedly going to set me up for life when I decide to retire. How do I protect myself from something that usually I don't have a lot of control over? Usually the company has the majority of the control over. How do I protect myself?
Two of my best friends on this planet are actually financial advisors. They're very candid with me, because they know I know their world very, very well, and they have both admitted to me that when markets go down, like when markets have really bad days, or they get into periods of time where it's just not going up anymore, they sit in their office every day and they hope one thing doesn't happen. What do you think that one thing is?
Oh gosh, no complaints from...
Simply, that phone doesn't ring. That's it.
Got it.
Because it's just the nature of that role. Financial advisors, financial planners, they make their money basically by collecting fees off the money that's underneath their management. So when someone calls up and they're looking for legit advice, I'm losing money, what should I do? What should I do? Mm-hmm. Their one job is just to calm that person down and just, be calm. We've been through this before. Markets go through cycles. But while I have you on the phone, have you considered buying more at these prices? Type thing. So, part of one of the things, even just to protect yourself as we move into times of economic uncertainty, you have to know when to go to cash, just sit on the sidelines. You can have money that's going into a 401k that's basically just acting like a cash account, and sometimes you have to learn how to and when to do that. There's typically certain things that people can do with their retirement accounts that move into kind of safer assets during recessions, depressions, things like holding things like gold is usually one of the big ones. Gold is it's like the insurance of the equity markets. Typically when equities are not doing well, gold will go up, and then you kind of have a little bit of that balancing act. You can actually hold physical gold. You can get exposed to the gold market just through simple gold ETFs.
Okay.
And then this is just a way that just to kind of balance it out.
Gotcha.
Everybody should probably own some. On some level, if you are in the equity markets, if you do have a 401k, to basically insure that with other assets, like that.
What is one of the things that most people think that they're doing right and they feel really good about,
right,
but is actually hurting them long term?
I meet a lot of people that are attempting to do this on their own, and they don't have any diversification whatsoever. So while the stock market is great to kind of build wealth over time, I meet a lot of people that are, they'll talk to me about their investments, and I'll listen to what they own, and it's just, I own this stock, I own this stock, I own stock in this, I own stock in this, and stock at this, and I never hear anything else. And they're buying stocks with no real plan for the downside. They have no real plan for the upside or downside. They just want to own something. When somebody is on kind of the professional side of things, before they'll put any dollar into anything, there's a plan around that dollar. They have a plan for the downside if something is losing money, and they also have a plan for taking profit. The average person doing this on their own, they're simply operating on hope. That's it. Wow. And so there's no real plan for upside or downside. And so it's a good idea that if you are getting into investing, you want to learn how to kind of spread yourself out.
Hey guys, welcome back. Hope you enjoyed that video. If you haven't already done so, take a moment now to hit the like button and subscribe. It really helps out my channel, and you'll get more content just like this, more videos with David Warner coming up. And he did gloss over something that I think is very, very important, but in the interview it might not have been that obvious, is that if you're contributing money to a 401k and you want to protect yourself from a market crash, you are actually able to call up your provider, whether it's TD Ameritrade or Fidelity or whoever, and tell them to pull your money out, not a withdrawal, just to take your money out of the stock market and just have it sitting in cash so that it's not exposed to the risks of the market. It is something that has to be done manually for most 401k providers, but it should be available. I don't want to promise anything because every provider is different, but it should be available, and it is something that you should be aware of. Now, the big question is when? When do you actually go to cash? Right now, the markets are at all-time highs, and there's some people feel like there's a certain amount of fear building up. They want to get out now before they feel like a crash is coming. Others want to ride the wave all the way up. Like, we don't know what's going to happen. Obviously, we don't have a crystal ball that we can predict the future with. However, we can make mathematical predictions, and I'm going to post another video about a very simple technique that you can use to actually protect yourself and know when to pull your money into cash and when to put it back in. It's a super simple technique. I'm going to be dropping that video at a later time on this channel, so make sure you stay subscribed, hit the like button, stay subscribed to YouTube. Thanks for watching, and stay tuned for more from YouTube.